Good evening, all. This is Shay Horowitz, ShogunTrading.com. Want to talk a little bit about the market. There's some really interesting things going on right now that you need to be aware of. We'll start off with S&P 500. S&P 500 is is very choppy right now. We really haven't found our place over the past a week or so. We came down, we broke that 924 support, and then we came back down, and now we're just hanging around the 200-day moving average, which is this red line, and we're really not going anywhere, just going sideways, going sideways. Notice the 50-day moving average is right here, right below. That's the blue line, and the yellow line is right here, which is the 21. The interesting part about it is that the market is trying the short side. It really is trying the short side. And there's quite a few stocks that look very, very toppy. But the short side is one of those things that somebody has to jump in first. The water is cold and the water is full of alligators, whatever you want to call it. Somebody has to jump in first. There's quite a few things going on right now from a geopolitical standpoint, such as Iran, such as North Korea, that make the market a little bit more difficult. The market is really watching energy costs, watching the oil market, they're watching the currency market, they're watching the housing market, and they're watching, more important to me personally, is the bond market. Now, I'll show you all of them. I'm going to try and run through them really, really fast. If you go on the website, you will see that I put up a cheat sheet where you can actually look at every single sector and see what's going on with a possible entry point. So we're going to fly through them fairly quickly and go from there. Okay, so first of all, we're at the S&P 500. I think we are starting a slight downtrend. No strength. There is no strength yet. It's not the time to go short on the S&P 500. Even though we're in a downtrend, there's no strength. Next, Dow Jones Industrial Average, basically the same thing. Also, no strength, downtrend, but no strength. We need to wait for the strength to change, and that's when we'll actually go short. NDX, the Nasdaq 100, is actually a little bit different because it's actually in an uptrend. It's still in an uptrend. It hasn't switched yet. It's not showing us the lower highs and lower lows yet. It's still in high highs and higher lows, but it is slowing down. So we might see the NDX itself also switching to the downside. Now, there is something that can happen right now. Futures are up, as I speak, up 8 overnight, but it could be up a lot more, all depending on geopolitical factors, of course, and that can change the whole picture. So if you want to trade the continuation on the NDX, I gave you a level on the cheat sheet to go long on the NDX, which could be pretty interesting. Let's talk a little bit about gold. GLD, this is what I use. It's the Spiders Gold Trust, and you can see how we are actually forming a lower top on the gold, which is pretty interesting. You know, we try to break the 1,000, and now we're forming a lower top, and we could actually start a downtrend at this point. No strength yet, but it's definitely one that you want to watch on the downside. I would look at the $91 level, which is right here. 90.73. Actually, I'm going to correct the cheat sheet to the 90.73 level, and that's where it's going to switch down and gold is going to come down. That's pretty good. That's anti-inflationary. Silver basically the same thing. Also a slight downtrend, but not a whole lot of momentum. It's a little bit different than gold, but pretty close. And one of the most important ones right now is USO. I called USO long around the $30 level, went all the way up to 40. This is an oil sector, but right now the uptrend is getting a little tired. I'm not saying go short yet, but it is getting a little tired. So if you are long, I suggest you take profits on it and get ready for the short side whenever the short side gets started. Also want to talk about the dollar itself. The dollar itself has been diving. It's been diving for quite a while, but the downtrend is slowing down. It does not mean we're changing into an uptrend. It just means that the downtrend is slowing down, which is very, very important for us. And I'll relate that into other currencies in just a few minutes. Let's talk a little bit about currencies. These are the Australian dollars. Australian dollars is climbing up. Not a whole lot of let up in this one. This one is the British pound. British pound also is about to break out to the upside. And of course, that's against our dollar, and that's not a good thing for us. Canadian is basically the same thing as the dollar. I mean, it's a lot closer to us because we are basically in the same area. Let's see. These are the euros. Euros are also in a slight uptrend. Slowing down a little bit, getting weaker, but they're still in an uptrend compared to everything else. Notice that the individual European currencies, such as the Swiss franc, British pound, and I'll show you did I show another one? I'm sorry, I didn't show another one. But anyway, they're a little bit stronger than the euro itself, and they're still looking up. I think Swiss franc can still go up, and that's of course against the dollar. This is Japanese yen. Japanese yen could still go up if it breaks that 105 level. The Japanese yen can keep going to the upside. That could be, of course, against us. Russia. I want to talk a little bit about emerging markets every once in a while because I think that's extremely important. Russia had a hell of a run. Went from 12 all the way up to 26, and now is pulling back. It's actually entering into a downtrend, and we'll be looking for an entry fairly soon. We'll be taking it on the short side. I just have to wait for strength to pick up, and we'll go short on Russia. The other one is the emerging markets that I like. It's also the same story. It's also entering a downtrend right now, and we'll be looking for an entry. We're looking for strength to pick up, and then we'll go short on the emerging markets. Stay tuned because I will be calling shorts on these. These are bonds. These are the real story right now. These are the treasuries 1 to 3. As in short-term treasuries, they took a dive, they took a hit, and it looks like they're going to keep coming down. We're in a profit-taking mode right now, but they're still coming down. This is the 7 to 10-year treasuries, and you can see how we had a heck of a downtrend. We're still in a downtrend. We could still keep going, but it is in the profit-taking phase right now, and it could slow down. So our dive of our treasuries could slow down. I'm not saying we're turning around. I'm not saying that treasuries would go back up, but they are letting off a little bit. These are the long-term bonds, and this is something that I talked about in our blog last week. The fact that we went straight up and straight down with the bond prices. As bond prices come down, yields go up. If yields go up, if we start having treasury auctions at 4%, 5%, 6%, that means the mortgage rates are going to have to go 5%, 6%, 7%. That is what's slowing down our real estate market right now. The fact that interest rates are going up. If interest rates go up, real estate market starts slowing down. And that's something that's very, very important for your personal finances. You have to watch the bonds. If you see that interest rates are going up, our whole refi wave is almost over. As a matter of fact, they came out with news that the refis have slowed down to almost a crawl. And this is the reason why. Let's look at some more real estate. This is U.S. home construction, and a pretty interesting sector, and it looks like it's starting a downtrend. So construction is going to start coming down, and these are the home builders themselves also starting to come down. Could get very, very interesting on the short side. I have one more for you, and that's the retail holders, and you can see the double top on it. There's a double top. One top and a lower top, and then a support level. If we break the support level, we're going to come back down, which means consumer spending is going to come back down. Well, basically, it goes together. Basically, the retail sector follows consumer spending. That's what prices are following. So what do we have? We have the bond market, the treasury bond market stalling a little bit on the short side, but it's still in a very strong downtrend. We have the dollar in a downtrend. We have the European currencies against the dollar coming up. We have the Japanese yen coming up. We have gold slowing down and coming back down. We have silver slowing down and coming back down. Those are very, very interesting. We have emerging markets in Russia that are actually looking to come back down as well. So those are the ones that you want to look at. Now, one of the things that we're going to do with trading all of these is we're going to look at the ETFs. We're going to look at the double ETFs to the long side, double ETFs to the short side. I don't have any really great trades for you this week, but since this is a long-term view, we're going to wait for the perfect opportunity, and only the perfect opportunity to put up trades. So stay tuned for those. Have a great night, and I will talk to you either if you're a subscriber to our daily newsletter. I'll talk to you tomorrow night. If not, I'll talk to you next week. Take care.